The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, using artificial intelligence to help with our marketing plans and making marketing decisions when it comes to commodity and livestock trade, that is something that I think we're going to be hearing more and more about as the years tick forward. We're in 2024. We have a lot of great technology available at our fingertips, and one company is looking to do just that and utilize some of this technology. We want to learn more about quantum hedging, and one of the founders of quantum hedging is with us here today, and it's a person and a voice you may know. Kevin McNew joins us here on the program. Kevin, it is great to talk with you again, sir. Hope you're doing well, and congratulations on quantum hedging being a brand new entity out there to the world, Kevin.
Well, thanks, Jesse, and thanks for having me on the show. It's an exciting time in AI, and especially, my 32-year career has been devoted to helping farmers understand and predict markets. And so I'm excited to harness this technology for the benefit of farmers. And so, I know AI can be a little bit scary to some of us, and there's a lot of uncertainty around it. But I firmly believe this is a positive step, especially in the crop marketing space, which I feel has really been devoid of concrete statistics and analytics to objectively say where the market's going to go. It's a lot of hunch. It's a lot of feel. There's some red line crossing blue line stuff where people are just kind of looking at their favorite indicators. And, the approach that we have at quantum hedging with AI is to really kind of look at holistic, all the data, and let the models sort out what is the most important drivers for markets as we move forward.
Well, let's talk about this a little more, because you raise a good point there. AI could be a little scary for some folks, and we hear about these things like Chat GPT and all this different stuff that's out there, and et cetera, et cetera. And I know too, I hear a lot of talk about the funds and the algos and the computers and all the different things that are in our markets currently, Kevin. So walk me through how AI could be a benefit. Like what can we look at here with artificial intelligence to help influence our marketing decisions? I mean, talk about that a little bit. Try to take some of the scariness out of this for us if you can.
Yeah, for sure. And that's a great question. I mean, what can we expect out of AI? My expectations out of AI is a couple of things. One is it's objective. By that, I mean that there's data and sound practices that go into making predictions from data. So let's call it, it's objectively, this model is built and tuned and used in a way that is objective and unbiased. And so that's helpful. The other thing I would say is that it's not just the actual forecast that is meaningful, but it's actually kind of the degree of uncertainty around that forecast. I mean, a forecast, let's be honest, a forecast is never going to be 100% accurate. That's not realistic. What we're trying to really do is kind of shift out of a coin flip. If you imagine like predicting where the market's going to go, it's kind of a coin flip, and so we want to kind of shift that probability from a coin flip outcome, the market's going to go up or down with 50-50 chance, to something that looks more like 65-35 or 70-30. And so the nice thing about quantum hedging's models that we have been developing over the last year is that they really do give us that probabilistic view of not just what the forecast is, but how much confidence or what's the probability that forecast will be factual or turn out to be right. And so, I think that's going to be helpful to farmers, because we want them to say, okay, here's a forecast, but then here's a kind of, probability that forecast will be right. When the weatherman tells us there's, an 85% chance of snow or rain tomorrow, we tend to believe that's a pretty good chance, and so you're going to see that from our models at Quantum Hedging, which is, these probabilistic views of the market.
Well, I wonder too. I think some folks maybe they think about AI and some of the scariness there, but being able to pull all this data in, I think that the benefit here, Kevin, is that not only are you getting this, objective data, but also you can have the human element with what you guys are doing, look at all this data as well. And so you're not necessarily losing that human element to making decisions. You're just amplifying and adding to it. Would you agree with that?
Yeah, and absolutely. That's a cornerstone of why we started quantum hedging. It's myself and two partners who I've known for a decade. And each of those partners comes with 25, 30 plus years of experience in commodity markets. And so, I really have a strong belief that, not just anyone can kind of spin up an AI model and get it to work. This is not like a magic formula that will necessarily work. This is hard stuff, predicting markets. And so you really need that expertise. I call it kind of expert guided AI models. So, the three of us are really, from our years of experience, have some basis for where to send these models to find the best opportunities in prediction. And so, I think that's going to help us as we move forward is, understanding how markets work, what are the likely best data structures to bring into it. And, there's been some interesting things that we've seen come out of this. For example, like this time of the year in March is kind of a slow time until we get to the end of the month with the acreage report. But, one of the number one statistic that our model is picking up on right now, which might be a little surprising to some of the farmers out there, is that, foreign exports at this time of year have a strong probabilistic impact on corn prices. And so, for example, we found that in the March WASDE report that comes out from USDA, that if you were to look at the foreign corn exports line for that S&D table, that basically that indicator alone gives you about an 80% chance of predicting the corn prices move over the next couple of weeks. And so that alone, that foreign export number, if it goes up, there's about an 80% chance that corn prices are going to fall. If our foreign exporters, if the foreign exporters are exporting more, our corn prices are going to go down. And conversely, if their exports are expected to fall, then our corn prices go up. And that association, that correlation, it's about 80% of the time it's right. And so that's really unique. And I've been in the industry for 30 some years. I mean, S&D matters, but which specific statistic matters at what time of the year is pretty challenging to pinpoint. So that was an interesting outcome of some of our models.
Well, and to that point, Kevin, I think with AI and all the different data that's out there, I think about the end of the month reports coming up. Those reports are going to come quick, and there's going to be a lot of information, but harnessing something like artificial intelligence to analyze all that data and find the most important pieces of that data can maybe, help make some informed decisions maybe a little bit quicker or point to some trends. I mean, I guess, rather than sitting there and crunching a bunch of numbers, you can let AI help do that and then analyze it from what the results are, right?
Yeah, exactly. I mean, as we look ahead to the end of the month, our model has picked up on kind of what is the key indicator that will drive that end of the month report. And what it's found is, on one hand, it's intuitive. It's the soy corn price ratio. A lot of people talk about that number. There's a lot of debate about, if it's this, if it's, 2.4, 2.5. Oh my gosh, that favors a lot of beans, vice versa. So it's that soy corn ratio, but it's the soy corn ratio at a particular point in time of the year. And that particular point in time of the year where our AI model found it's most impactful is actually last fall. So when you go back to last fall, that soy corn price ratio is really instrumental in determining what our soy and corn acres are going to be, and therefore what's the reaction going to be on March 31st. So Here's the statistic, write it down. This might be helpful to you farmers as you're thinking about how to trade this. When that soy corn ratio in October is greater than 2.35, which it was, then we have a 70% chance that the corn market reaction will be positive. In other words, a high soy corn ratio last fall probably means more soybeans and therefore less corn. So 70% of the time when we've seen this high of value, we see corn prices rally after that March 31st report or March 29th report this year. So we'll see, but that's the data that we're seeing come out of our AI models.
Well, Kevin, I have to think it's always amazing just the amount of data that is out there to look at the markets. And, in today's world, marketing, I think this speaks again to what you guys are doing here with quantum hedging and using AI. I mean, it's not the way we used to market back in the 80s and 90s. I mean, things have changed. And to some degree, again, that could scare folks, but also folks can take some stock in knowing that, hey, I have a lot of tools available here to make informed decisions and better manage my risk. Right, Kevin?
Yeah, absolutely. And I think, this fits in, I grew up on a farm and the reason I'm in the business I'm in is because my dad struggled so mightily with marketing in the 80s. I saw it as a young man. And but on the other hand, he was very data driven as a farmer in his kind of agronomic decisions. He was choosing seed. He was making different decisions based on data. So I think farmers a lot of times are data driven, especially if they have the tools to do it. And so I think having a crop marketing tool that is AI and data driven, I think actually aligns with many farmers' interests. It's like, I don't want a human or an emotion to make that decision. I want it to be objective. I want it to be data driven and backed by data. And so that's why I think AI has a lot of promise for farmers in this challenging space of predicting markets.
Yeah, take away some of that emotion and make an informed decision. Well, Kevin, if folks want to learn more about what you guys are doing with quantum hedging, I'm sure going online is a great way. How could folks get in touch with you guys, Kevin?
Yeah, just look us up, quantum-hedging.com. Feel free to sign up for our website to get free blog updates. We have some subscription packages for some of our stuff, and we have some managed programs as well. We're long-time veterans of this industry, so it's not just a subscription, but we also have our managed acres program and things like that if you want a more custom tailored approach to your marketing.
Kevin, final thoughts from you as we kind of wrap up the discussion here today. Again, very interesting stuff, and I know this won't be the last time you and I talk, but again, just thinking AI and using the tools in the toolbox that we have when it comes to our marketing. Anything final you would want to share or reiterate to folks here on the show today?
Yeah, I just think, it's a challenging time. The markets are moving down. They moved down sharply over the last 90 days, and that's been painful. And I know a lot of farmers got caught flat-footed. I don't see a lot that really changes that paradigm. I mean, our markets or our models will pick up on new data as it comes available, but right now, everything about what we're seeing and what's coming in and our model lean is pretty bearish. And so we'll see what happens on March 31st. That'll be our first bit of data for 2024 year. But overall, I think farmers need to get ready for these prices to lower under normal circumstances this growing season.
Again, folks can learn more, quantum-hedging.com. With that, Kevin McNew with Quantum Hedging. Good to talk with you again, Kevin. Thanks for joining us. We'll get you back on the show again soon.
Thanks so much, Jesse.